The local markets are set for muted trade this morning after ending the day flat yesterday. The Johannesburg Stock Exchange slipped after data suggested that the U.S. economy may be weakening. Now, the rand also weakens in line with emerging market currencies, heading above the 18 rand to the dollar mark. Chief Investment Officer at Makwe Fund Managers is Makwe Masilela. Joins us now for a quick overview of how the JSE is performing in early trade. Mr. Masilela, thank you very much for your time. Let's start with how the local index and in particular the rand are faring in today's trade after a sluggish end to yesterday's session.
We managed to open nicely up, 0.5%, and all it's a question of, as much as we've seen a bad economic data coming not just only from the US, we also locally had bad manufacturing numbers, and you check what is happening with the US labor market, showing that it's slowing down, and that itself is exacerbating our worries that the economy might be heading to a downturn. But at the very same time, when you see the economic data not doing that great, then it also starts to raise hopes that, hey, maybe central banks will remember that economies are starting to struggle and probably will start maybe to pause when it comes to the interest rate hikes. As we've seen this morning that the Reserve Bank of India defied market expectations and decided to hold the interest rates. But that itself, when you expect interest rates not to rapidly go up, that is helping equities. Hence, we see at least markets trying to bounce back today. And when people are more worried about the economic recession, stuff like that, then they're looking for safety. And in this instance, people will always run to the king dollar. Hence, we see that the dollar is cautiously up at the back of that. And also remember, tomorrow you are getting that US job numbers. That will also give you an indication what to expect going forward when it comes to US interest rates.
Let's talk about the IMF and World Bank spring meetings. Those are coming up shortly. What have those agencies said about the regional growth of the sub-Saharan Africa region, particularly as it pertains to South Africa and Nigeria?
Remember, South Africa and Nigeria, they account for anything between 40 to 50% of the region's GDP, and they are worried that they will drag the region down. And number one, also we have seen that when it comes to the whole issue about the growth for the region, initially they thought it will grow by 3.5%, now they think it will grow by 3.1%. And if you think about it, 80% of our trade is done abroad, that is for the region, but we've already signed the agreement to start trading freely. So if we can just improve on our trade logistics and also on our payment system, that will help. And the South African economy is expected to grow, according to the World Bank, by 0.5%. And because we still need to deal with the electricity issue, education, and also to make sure that we've got other structural reforms in place, then probably that will help. And if the region's economy is going to grow by 3.1%, that implies that the per capita income growth will only be 0.6%.
Let's talk company news. Northern Platinum, and it's now decided that it is walking back its intention to acquire Royal Bafokeng Platinum, and they're citing lower platinum group metal prices. It's a sudden change of heart, is it not? Talk us through those developments.
And it's not surprising to think that the guys they offer, which amounted to almost 50 billion, when you break it down, we are talking almost 172 rands 50 per share. But the last tranche that they bought when it comes to the Royal Bafokeng shares in the open market in December, the guys overpaid. They paid close to almost 180 rands 50 cents. So that shows you that the guys have been overpaying. And you look into the Impala Plates offer, plus minus, you can put that into almost 150 per share. But you look into the economic sense of this whole thing, the logistic part of things, is better off for Royal Bafokeng Platinum to go ahead with Impala. But yes, the guys are citing prices going down, and I don't think it's a wise decision coming from executives. You cannot base your business plan going forward on prices that were realized during the pandemic, and instead you should be pricing all that into long-term prospects of your industry, given that we'll be spending so much money. And at least as well on Monday, we had one of the minority shareholders saying, guys, please as Northam, move away from that. This is just too expensive for you. Probably you are better off concentrating on your organic growth.
Let's conclude the conversation with Johnson & Johnson, which has agreed to pay $8.9 billion and this is to settle the tens of thousands of lawsuits over the products suspected of being carcinogenic. I'm glad I've got that word right. It looks like there is finally an end to this saga.
Definitely it is, and we are talking $8.9 billion, and this is the largest product liability claim ever. And the guys, what they'll try to do, they'll try to contain all this into their fresh attempt when they go for bankruptcy filing, so that it can be contained within that unit that will be applying for bankruptcy. So at least they've got have to get a way to close all this chapter, which was not okay for them.
Makwe Masilela, let's leave it there. Thank you very much for your time.